everyone. Welcome to the 6 live event hosted by this time, more rare scenario 6. My name is Romeo Maione, the VP Solutions here at 6. Today I have the pleasure of talking to Maxim Kouxenko, a Senior Account Manager at 6, who's been involved in more than 200 digital investor events in the junior mining industry. I actually think it's probably closer to 300, but at the very least, more than 200. So he's no neophyte to the investor webinar. And what he's going to do today is run through a presentation on how to use digital investor events to drive interest from capital, all different types of investors. And afterwards, we're going to be accepting some questions from the audience. As a reminder, you can submit your questions in the chat at any point during this presentation. As always, the summit is being recorded and will be available on 6.com to watch afterwards. Without further ado, I'm going to throw it over to Maxim so we can get started with his presentation.
Yeah, thanks a lot, Romeo, and thank you everyone for joining us here today. I'll take you through a total of 6 tips, both do's and don'ts, on how you can make the most of your virtual events and stimulate investor interest and buying intent. If you could take away one thing, it's that the market will reward you for speaking, even when your instinct is to be silent. So let's get right into it. So we'll kick off with, as always, the positives, the do's. So again, often I hear from clients that we're waiting for news and there's no point in talking. And that's terrible, since news can get pushed back and then you don't talk to the market for 4 to 6 months, in some cases even more. And why is that terrible? So from reading different chat boards, for example, CEO.ca or the bull boards, everyone tends to assume the worst when you're delayed and don't talk to the market. And these conspiracy theories tend to fill in the gaps, and people who have to make tough financial decisions this year or the next year may end up selling out of worry. So again, I've seen plenty of examples where people just end up assuming the worst, even though it may not be the case. Typically, it is not. And some of the reasons that the news can be delayed: I've seen slow assay results, re-assays, conflicts with parties during feasibility stages, strategic partners requesting something new of them, or perhaps even lawyers getting involved. So you can engage and talk to the audiences to your audience to reassure them, and it doesn't have to be news related. So you can make the events positive, such as an intro or a re-intro to the team, a focus, or even focusing on a different type of audience that does not already follow your story or is very limited in following your story, by doing something like an analyst fireside chat about why they're bullish about the company. This can then spread to their analyst colleagues, and you'll get new people interested in this the story that you're trying to get out there into the market. Some other great event types that I've seen and that I've hosted are pre-recorded events. So, for example, a tour of your site, tour of the core shack. People really love this kind of educational content, and it adds to your credibility. And it instills investor confidence, showing that you and your team really know what you guys are doing. So again, just making sure that you're actually talking to the market on a regular basis. There's a reason why we've put this up at the top, but really, it's a great time to talk to the market. So again, you want to be an investor whisperer, and what I mean here is you want to have empathy. Often investors will be fairly clear about what they want to hear, and you want to know what their worries are. So these investors, as long as you actually listen, you'll be able to find what they're saying. You just need to look in the right places. So CEO.ca, podcasts that mention you, replies and comments on your videos, on your social channels, on bull boards. All of these are great opportunities for you to take a look and really see what your reputation is in the market right now with these investors. It won't be everyone talking, but you'll have quite a select few investors that are typically saying what the market is interested in finding out or is worried about. You really want to make sure that they're felt heard, And I'd even go as far as to encourage them to talk to you. So for example, you can dig deep and email your investor list with a survey, asking them to submit questions in advance of an event, and then hosting that event live, getting them into the room with you live, and addressing all of those things there. This can lead to very fluid conversations as well, because these investors will be joining in to listen and find out what the answers are to their questions. And you'll want to talk to them as they submit chats, as they submit questions. And the most successful events that I've ran of this format have been where the person talking to the investors is going through the chats as they come in and dynamically answering them and tying them in to the overall presentation and conversation. The last do here is, again, you should be using all the promotional avenues that you can, and really leveraging them all to your advantage when you're doing these events. You want to save yourself time. You want to make sure that you get the most of your time, of your money. And for example, if you're using a vendor for IR, you want to make sure you leverage their audience to promote your events in advance. Anything that the vendor has to offer, whether it be social, email, even posting to their CEO board. If you don't have a vendor or you're looking to find a vendor, make sure it's one that has a solid distribution network. So you have to really vet who you're going with. Make sure that they have not bots, but actual investors that are interested and that are looking to find great investment opportunities, such as your company. Don't be afraid of putting the event in your news. So oftentimes, great events can come out of press releases. So what I recommend my clients to do is actually take the links to these events, add them to your news release, tell people to join into this event, and also, sometimes with great press releases or great news releases, what you can do is you can actually send out a separate press release saying that you're going to be having an event on the topic. And just to get those extra eyeballs on it, a lot of people will have something called FOMO, or a fear of missing out on the key context for minute details that you might talk to in the event about the news. So people want to join in and really hear what you have to say, watch what expressions you have, how excited are you, is your team that is potentially in the event excited about it, and really measure, should they be investing more on this news, should they be selling, but with the right approach, people will be much more excited about the news than they typically would be just from a press release. You want to make sure they also understand everything correctly. So this is a great opportunity to talk to the market, to shape the narrative or position it in the right way to make sure people don't get the wrong assumptions from the news release. Now, getting into the don'ts. So starting with one of my favorites here is you don't want to be shying away from tough questions. And this is pretty common in tough market scenarios like we are going through now, but a lot of people will be grumpy, will be frustrated that their stock has gone down, that it's a tough time, that perhaps some news is delayed. And these people are typically disgruntled shareholders. Sometimes you'll have trolls, but again, focusing on the people that are disgruntled shareholders, it is really important that you actually answer their questions and that you address their concerns. Again, these disgruntled shareholders can be buying more. They can turn into your fiercest advocates as long as you show them that you care for them and that you're actually interested in their comments. So deleting the actual questions, the comments that these people post is a big no-no, and a lot of people want to shy away from that. But again, you're a public company, you want to face the public, you want to accept these challenges and address them. Sometimes you'll find that it's better to address it in a one-on-one setting, but as long as you're actually approaching it and not just declining the question or deleting the question even, then it's a great opportunity to turn someone that's grumpy into someone that holds even more of a share and doubles down on their investment. Another one here is a fairly common one that I see companies do, and these are the companies that don't currently use SIX. A lot of them host events, their investor events, on platforms like Zoom, perhaps even Google Meets, Teams, things that are not focused on actually getting investors into a room with a company. So these platforms don't have the right data collection. Sometimes they don't even have any data collection. And you're really looking to get those phone numbers, emails, full names, perhaps what kind of investor they are, accredited, institutional, what their check sizes are even. And these platforms do not provide any of that, typically. So you really want to make sure that you're vetting what platform you're using and not losing all this valuable data. Again, these are people that you want to reach out to after the events, and you're not going to be able to reach out with the right context unless you actually get their very specific data. So a good example would be, for example, is a current shareholder that is an accredited investor, registered and said that they rate your company a 6 out of 10 on the survey. And perhaps they requested a meeting. And what you really get from that is you understand that, okay, this is likely a disgruntled shareholder, great opportunity for me to talk to them, tell them why they should be excited about doubling down on their position instead of selling, and get them to be an even bigger investor in the future. So that also, you also have to make sure that you're really not setting up a massive barrier with these kinds of questionnaires in advance of registration. That's why, again, it's very important to vet what platform you're using. Because if there is a massive barrier, and let's say you have tons of required questions that people have to answer before they're able to register, you'll just have people turning away. You'll have people putting in fake responses to get in. And overall, you just have a more frustrated crowd that perhaps will lower your event attendance in the future, or even for that event. And finally, after your events are over, that's when you really don't want to gatekeep. So once the event is published, the replay is out, you'll want to put that on the YouTube channel. You want to have your vendor, if you're using a vendor, to put it on their YouTube channel, as typically they'll have more viewers, and not gatekeep at that point. A lot of folks will register in advance of the event. You'll get all of those emails, but you really want to spread it out to the broader world, the broader market, for those that perhaps have not or don't want to register for a live event. And finally, here's another really important one. And it's, again, once you have that data, do not ignore the follow-ups. All too often I see, again, 60 meetings come in, and sometimes people don't even reach out to a single one. Time is very scarce, and it's understandable that you can't reach out to every single person that attends an event, especially if there's hundreds of people. But even doing maybe even a blanket outreach or a semi-private or tailored outreach to the people that are requested meetings, shooting them a calendar invite or an ability to book a time with you to meet. This can create many opportunities for new investors, and it can secure new funding for you in the future, whether it be through people buying on the open market or participating in future private placements. So these are people, again, that took an hour out of their day to join you, to listen to everything you have to say. There's no 1.5x speed as you could do on a video replay. You really want to make sure that you're understanding and empathizing with these investors that are joining you, and taking advantage of their interest in your company. There's a relatively narrow window where these people remember that they attended this event, that exactly what you talked about, and perhaps if it's around news, then that news can become more stale as you go along. So you do want to reach out within that 48-hour window. And sometimes if you have an investor, let's say, that is very interested, has rated your company a 9 out of 10, 10 out of 10, and you can see that they have a typical check size of $1 million, you'll probably want to reach out to them on a one-by-one basis, with a very tailored approach, tailored invite, saying, hey, I know you're from such and such institution, for example. Would love to meet. I have a lot of exciting stuff coming up with this story. Would love to meet and talk about it. So that concludes the do's and don'ts. So highly encourage anyone who has not perhaps done these things or thought about these things to reach out to Bianca. And I'll pass it back to Romeo for any questions.
Thanks, Maxim. We do have a number of questions come in over email. I know, just looking at the attendance, I recognize a lot of you. You're investor relations professionals. I don't want to keep you for too long. But there are a couple of questions that came in over email that I do want to talk about because I think they bring up some interesting questions. The first one, and I hear this a lot from clients in mining, which is how do I attract an institutional audience to events? Often, they'll get a big retail following, but they're just not bringing in the strategics and the institutions that they're looking for. And to me, the answer has always been, and experience dictates this, that if you want institutions to come, feature people from institutions in the event. They get a lot of emails, outreach from VPR CEOs. They don't necessarily want to hear from them. What I've seen really, really rapidly increase the number of institutions that show up to an event is if you're having coverage by anyone, really any analyst coverage at all, encourage that analyst to run an event with you. What we see is in these conversations, you actually get a much smaller proportion of retail that shows up to hear a fireside chat, with an analyst and a CEO. But they promo it to their friends and their peers and colleagues. They're looking for notoriety like everybody else. And that's the kind of crowd that they'll bring in. We find this is a type of event that's a little less interesting to retail, but institutions tend to come in large numbers because they're interested in the opinion of an institutional analyst. Honestly, these events that will triple, quadruple the number of institutions that pop into events. And for the retail that are there, it's a really important piece of third-party credibility. Trust is currency in investing, and I think particularly in junior mining. And if you can get an analyst on to give their take on why they're interested in the stock, on why they find the geology interesting, on why they're taking perhaps a contrarian investing thesis to the stock, that's when you're going to get really much more interested parties. It's a more serious investor audience that you'll attract with that kind of crowd. Max, I don't know if you had any other comments on that, but that was just my quick answer for institutions.
Yeah, no, that's a great point. I think it's very important, as you said, to get that third-party credibility. And it makes for a great reference point for people new to the story, especially that perhaps have not been following you and over the course of your milestones, where you're achieving these milestones one after another. It'll give a very nice overarching review from someone that's obviously not, or most likely not going to be biased. You always hear, or you always see companies have their own team members on, but really, that's you can always have bias in that. Whereas with an analyst, they have their own reputation, their own company's reputation to uphold, and that's something that people understand even subliminally.
Yeah, I think that's it. So third-party credibility. It's people have everybody in the industry has been burned by a CEO before. It's kind of how it is. I think that's how the industry works. So that third-party credibility, I do think is important. But jumping into the next question, there's something, I don't know about you, Max, I actually hear this one a lot, is clients will say, look, the reason I want to wait for news, I know that was your first slide, I think, was don't wait for news, is they say they have investors who complain about webinars that don't have news. How do I deal with this? My view is it's interesting. You're always going to have, in any audience of any size, one or two grumps and cranks. It's truly impossible to avoid that crowd. And I think it's pretty easy what you say to them. Like if somebody reaches out and says, I thought this was going to be about the feasibility study and it's something else that I don't care about. I think what you tell them is, well, this event wasn't for you, right? And you should be happy that we're getting the story out to new investors and different audiences with different types of content, because you as an investor in the company should want to be shouting it from the rooftops, right? And when delays happen, as they inevitably do, not talking is the biggest mistake you can make. So don't let one or two grumps and cranks speak for the whole market. I think you mentioned in your presentation, we've run extensive surveys with thousands of respondents on social media and elsewhere asking, do you prefer an extremely over communicative, like we phrase it in the most annoying way possible, versus an under communicative
email every day type of thing.
versus an under communicative management team? And overwhelmingly they said over communicative is better. So I mean,
I think it was like 70% that said
it
was like pretty incredible.
It was overwhelming, right? Of people who strongly prefer over communicative. So I really wouldn't let one or two people speak for the market. And if you need to talk to them after, which I think a responsible team does, you just say, I really appreciate your note. This event wasn't necessarily for our longs who know the story. And hopefully, within reaching another audience, that'll ultimately create some shareholder appreciation for you. I'm not exactly telling IR Pro to do their job, but I think that's a line that is factual. The last one is a really practical question. I get this from every client, which I think is a great question, which is how long should the event be? And the real answer is get your best material out in the first 20 minutes. Like if you think there's something that's going to make somebody buy, like if you think you're going to be able to impact investment with a piece of information, it should not come out past 20 minutes. What we've seen, we've got, frankly, a fairly creepy amount of data that shows, drop off at the exact moment, et cetera. And 20 minutes, you start to lose attention span. I'd love to say my attention span's great, but I'm part of the TikTok generation to some degree now. We're slowly degrading, right, minute by minute. And what we've found is if you have something that you think is going to lead to a purchase, upcoming catalyst, et cetera, it should be in the first 20 minutes. Which isn't to say don't run an event that's an hour. Because if you have people clinging on to your every word, asking questions, et cetera, keep them, but the bulk of people you will have lost by that point. But keep paying attention to everybody you've got for the full time that you've got allotted. Because the people asking questions, those are your most interested parties, right? Everybody comes into your story to a different part of the investment funnel. It might be the first time they've heard of the company. It came in an email from Six, whatever it might be. Or they might be a long who knows the story dead and wants very specific questions about geology, et cetera, and they're going to stick around. But yeah, my only point there really is get something that you'd want every investor to know out in the first 20 minutes. I often tell people if they got a slide 30 minutes in that summarizes the presentation, counterintuitively go ahead and put that at the beginning. It'll help you get people on the right foot with the presentation and move on elsewhere.
And actually, sorry, Romeo, I'm just going to jump in there to combine the points about, you should be talking to the market even when there is no news, and the shorter presentation time span. I have a lot of people saying, hey, is it okay to do an event that's not an hour? Like, is that still considered a webinar? And don't be afraid to do a 5-minute event, a 10-minute event, right? Like just short updates for the market, much better than not doing anything. And sometimes it's even better than an hour-long event every quarter. And
it's all you frame it, right? Like if you've set up an expectation with all your promotion that this is a major quarterly earnings call or a major investor update, and then it's 5 minutes, yeah, you're gonna get some disappointed parties, but you shouldn't do that. What we recommend is if you want to run a 5-minute event, and I love those 5 reasons to get excited about the stock in 5 minutes, you promote it like that. And then people come in knowing they're going to get a really quick piece of content they can ask a couple of questions about after. Nobody's in a grumpy mood after. They've heard from you. They feel like their money's in safe hands, and they can kind of move on with their day. Then you've got a nice, tidy piece of content you can put on social media and little bite-sized chunks. So I really am a believer in mixed forms of events and also mixed timelines. But in any event, my only advice there is if you've got serious content, get it out in the first 20 minutes because everybody's got an email or Bloomberg or something they're going to, right? It's just it's tough to keep everybody for an hour.
Yeah. So again, I guess the key takeaway here, right? Just market will reward you for speaking, and even when your instinct is to be silent. And if that's the one thing that you could take away from today, that'll be it. So yeah.
I'm always telling people to speak up. Silence is the enemy in capital markets. But anyway, that is pretty much all the time we have for today. This was speaking to our points, shorter events. I really do thank you, Maxim, for running through this session, putting it together. I also want to thank everybody who is in the room. I know You're all busy. I think I know a good portion of the people who are here. Really appreciate you coming in. Today's recording will be available to watch on demand in the coming days, if not by early tomorrow. So feel free to look out for that. And if you think of any questions afterwards, let us know. Reach out and we'll be sure to get back to you as soon as possible. Bianca's contact information on the screen. You can reach her anytime. But I hope you all have a great day. Thanks for coming out.